let me try and explain how I have implemented the lump sum calculator in Nifty2. So we're going to use somebody with a simple salary. Let's use Robert Pink, who has 100K. You'll need to make sure that you've calculated the daily and hourly rates using this. If you haven't, just click Get Rates and it will pick. So if I delete this and I click Get Rates, what that does is it picks the salaries from here, and it adds the salaries there, and it converts it into a daily rate and hourly rate using a formula here. If you need to understand how this thing works, I think I did a tutorial separately, but suffice it to say you need to have done this in order for this to be able to work. It will pick the rates from there. Okay, so let's pick that guy, Robert Pink here. We are going to say, so this month is the month it will be added to the payroll. This year is the first full year that we are using based on the guidance of the PAYE guide for employers on how to do the calculation. So that's year one. So we're in 2026. So the year one the first full year will be 2025. So let's say we are paying him half a salary per full year worked. So it picks his current monthly salary. So let's say he's worked for, let's say 15 years. Let's say you have some notice days to pay him. Let's say you not fired him, but asked him to leave immediately. Let's say you gave him 30 days, you're paying him his 30 days notice. Let's say he has some leave that needs to be paid. So after you input that, you click here details. Then what you do, you click on this like that. So what that does is it uses this method to add the components for each of the things we've put in. So you'll see there's leave, there's notice, and you can see it has taken the days, and it has picked the daily rate from PPU rates, and it has calculated what the figure is. And then it has given a half salary for each of the 4 years, and then the remaining years, 11 or 15, it has summed them in the last portion. Now this P9 data form would be if this person's salary was low and he had not used up his relief fully in the previous years. Let's say he was being paid 20,000 per month. It would mean every month he would have, say, 400 shillings, assuming personal relief is 2,400. He would have 400 unused relief. So in the event you're paying someone with a low salary, you will need to come in here and look at the P9s from those years and pick the income, the personal relief used, and the tax paid. And those figures will be populated here in the red. So 1, 2, 3, they'll be populated 1, 2, 3. But in our case, let me assume that that doesn't apply. So I'm going to say here, ignore P9s. Now, when I click process tax, I forget what that PRB income is, just ignore it for now. When I click process tax, it uses this formula to do the calculation. So it dumps, so it takes 2025 income, the total of that, puts it into 2025, then 24, 23, 22, it picks the half salary, then 21, it picks the remaining half salaries times number of years. Now, if you had put P9 data, it would put in the income here and adjust the income. Then it calculates the tax based on what were the rates in that year. I just did this so you can see what rates are being used. So it calculates the tax for each year. I think, oh yeah, you would put any extra relief you have here. Maybe like, let's say he had some, let's say he had some insurance relief or something. You would come in here and put whatever extra relief applies. and then it picks, if you had used the P9s, it would pick the reliefs from the P9s here, calculate the total relief that is still available for him to use, and it would deduct income tax, this, minus this, to give you this. So where those things are absent, that's the tax. And then if you had input the income, then you would have put in the tax paid, and the tax due would be calculated. In our case, if you ignore the P9s, it's just taking the figures as is. So it takes the total tax due, it takes the total lump sum, and puts them here as pay amount and tax amount. So if I close this, you can see it has picked these figures. So these figures, you can input them manually, or you can use this thing to do the calculations. So once you go back to the payroll and you process, it will just pick those two figures, the lump sum income and the tax. Let's go to here. The lump sum pay and the lump sum tax will be added. And if you look at the guy's payslip, he'll have his normal pay taxed as usual. So this is tax on the 100K. This will not be included in taxable pay, as you can see over here. And then it'll add the payee on lump sum, take the total payee, and then calculate his net tax, and then take that salary minus the lump sum plus whatever else is there to give him his after tax pay. And then you have the rest of the things happening. So that's an overview of how to use it. And you can, if you have multiple people, you just do one by one like that.